baby. Lululemon stock just got absolutely annihilated after they reported earnings today. So we're going to dive into the details. We're going to go look at the stock. We're going to go look at the earnings report. And I'm going to give you my honest opinion of whether you should buy the dip, bro. Should you buy the dip? Well, we'll see. Welcome back to Strongman Personal Finance. So first and foremost, let's check out Lululemon. This is our amazing company. Down 15.69% in the aftermarket. On the day before the earnings, the stock was up 3.81%. So I guess people were buying and thinking the stock was going to vertical line. Year to date, the stock is down 46%. Now, this is going to enrapture some people because they look at this and they say, stock dipped, therefore I can buy the dip and it will go back up. But I hate to tell you that sometimes stocks dip and they keep dipping forever. So we'll see. So year to date is down 46%, absolute annihilation. And I don't even think this includes the aftermarket movement. The stock was at 372 at the beginning of the year. It's at now 173. It's basically been more than cut in half. Brutal. On the year, it's down 20. And over past 5 years, it's down 45%. I'll say that again. This stock over 5 years during a pretty insane bull market is down 45% had you bought this stock 5 years ago. Ooh, baby. Now, if you dollar cost average, you might have made some money. And then, of course, over its entire lifetime, it's up 1,549%. So is Lululemon a fallen Kang? Well, let's go check out the earnings. So Lululemon Athletica announces second quarter fiscal 2025 results on September 4th, 2025. Oh my God, that's today. Revenue increased 7% to $2.5 billion or 6% on a constant dollar basis. Now, if we go look at revenue, let's see their trend in revenue over time. How's their revenue? Well, we can see that revenue has been steadily growing over the last 5 years, which is funny. The stock is down 46%, but the revenue has grown from the third quarter, it looks like, of 2020 of $1.1 billion. The revenue is more than doubled in 5 years. However, the rate of growth is massively decelerating. They had a huge, massive increase in revenue during the clown-demic, probably because of stimmy checks, people bored and buying workout garbage with their stimmy money. But ever since then, the rate of growth has decelerated. So the growth is definitely slowing down. But do keep in mind, the revenue has more than doubled in the past 5 years, so the stock is down 46%. Let's look at profits. How are we doing on profits? Well, first, we have free cash flow per share. So it looks like over time that free cash flow per share is, if you look at it on an annual basis, growing. Let's look at a little bit more detail on an annual perspective. Free cash flow has dipped overall. Free cash flow per share, at least over the past 5 years, has exploded. Okay, so they've definitely been cooking on free cash flow. So revenue's up more than double. Free cash flow's up. Stock's still down 46%. Gross margins. Let's look at the margins. So margins, this is their profit from selling the clothes before selling general administrative expenses, interest, and taxes. Gross margin is kind of trended up a little bit. I mean, a little bit of growth in profit. So they've been able to maintain their gross margins. Operating margin is very solid. For a clothes company, their operating margin is 20%, at least in the most recent quarter. That's a pretty good profit for a freaking clothes company with a profit margin of 14%. So if you grow your revenue, but you keep your margins the same, you're going to grow profits. Free cash flow margin, roughly the same as it's been ever since. So overall, I mean, pretty decent growth. I mean, look at their earnings per share. Their earnings per share is absolutely cooking. Okay, why? Because they're probably buying back shares. Let's see how many shares they bought back. Look at that share count going down and down and down and down. So I see revenue growth, I see profit growth, I see shares going down. It's a little crazy the stock's down 46%, but I'm sure there's a reason, okay? So let's see what the CEO said, Calvin McDonald. While we continue to see positive momentum overall in international regions, we are disappointed with our U.S. business results and aspects of our product execution. Okay, so they're sucking in the U.S. apparently, which is kind of crazy because the U.S. economy is apparently doing really well. We have closely assessed the drivers of our underperformance and are continuing to take the necessary actions to strengthen our merchandise mix and accelerate our business. Okay, do you think they can actually follow through? Do you think they can fix the issues of the U.S. business? If they do, stock will probably go up. For the second quarter, compared to the second quarter of 2024, revenue increased 7%. America's net revenue increased 1%. So their revenue increased slower than inflation. They're basically like not growing revenues in the United States. International net revenue grew 22%. All the growth is international. Comparable sales, same store sales basically, increased 1%. America's comparable sales decreased 4%. So if you went to any store, the actual sales in that specific store year over year are actually down. International comparable sales increased 15%. It's all international, baby. Oh, that's scary. Gross profit increased 5% and gross margin decreased 110 basis points, so 1.1%, but still very powerful margins. This is a very profitable business. Income from operations decreased 3% to $523 million, and operating margin decreased to 20.7%. Still very good operating margin. Okay. The company repurchased 1.1 million of its shares. Okay, let's see how much they paid per share to buy it back. So they spent $278 million to buy back 1 million shares. They spent $253 per share to buy it back. So they spent a lot to buy back shares based on the current price. Okay. In the second quarter, we exceeded expectations on earnings per share, but revenue fell short of our guidance driven predominantly by U.S. business. That's why the stock collapsed. U.S. business, bro. Okay. We are also navigating industry-wide challenges, including higher tariff rates. What you don't say. In light of these dynamics, we are revising our full-year outlook. As we begin the back half of the year, our branded balance sheet remains strong, and we continue to exercise financial discipline. Okay. We'll go look at their balance sheet in a second. 2025 outlook. For the third quarter of 2025, they expect revenue to be between $2.4 billion to $2.5 billion, representing growth of 3 to 4%. So their revenue growth is still decelerating. It's decelerating even more. Okay. Down and down and down. It's still positive, but it's decelerating. Basically, that's inflation right there. Diluted earnings per share are expected to be in the range of 2.18 to 2.23. Now, how much has their diluted EPS grown? Well, Q3 of last year. I like how they're in Q2 of 2026. Like, what is this? Why? What's going on here? Why can't you just have normal freaking years? Okay, diluted earnings per share was 2.87 for that prior quarter, and they're guiding for between, where is it at? Where is it at? I'm blind. 2.18. So their diluted earnings per share is actually guided to be lower than it was. Interesting. Okay. Let's see. For 2025, they now expect, this is for the full year, they expect net revenue to be in the range of $10.8 billion to $11 billion, representing growth of 2 to 4%. 2 to 4%. So, sucking in the U.S., margins contracting a little bit, and growth rates precipitously dropping, supposedly because of, I don't know, tariffs in the United States. The guidance for 2025 included an estimated reduction in gross profit, including vendor savings and pricing actions, reflecting our current assumptions about higher levels of tariffs on imports. Yeah, you see what I said? The tariffs were going to cook certain companies, okay? Because the cost, the price they have to pay includes the tax the government is assessing. It's a tax. And the removal of the de minimis exemption. So there was a certain dollar threshold. De minimis just means like small, basically. There used to be a threshold where you wouldn't have to worry about tariffs. There was an exemption, but they got rid of that because Trump wants tariffs on everything. And this directly impacts the profits of companies. Actual results could differ materially. Well, you just go buy some of Trump's crypto and maybe you'll be okay. Okay. So let's look at their profit and loss. Let's see what jumps out to me. So gross profit contracted a little bit year over year, but nothing incredible. Still pretty powerful gross profit of 58.5%. Selling, general, and admin expenses actually ticked up a little bit to 37.7% of revenue versus 36.8%. And income from operations dropped to 20.7%. So you can definitely see their margins contracting and their revenue contracting. Interesting. And of course, earnings per share are down, but they're buying back shares. Let's look at their balance sheet. Are they actually a fortress balance sheet? Well, they got a, what is that? A 1.15 billion in cash, 1.7 billion of inventories for total current assets of 3.5 billion. And they have total current debts of 1.5 billion. Does that include, let's see, unredeemed gift cards, 252 million. So balance sheet from a liquidity standpoint is pretty solid. Property, plant, and equipment. They've actually added some decent amount of property, plant, and equipment, about $150 million on probably new stores. They've also increased right-of-use lease assets. This is just reflecting the current benefit that they're getting from the leases. You actually put a lease on your balance sheet as an asset and a liability because you're using an asset, you're leasing it, and you also have that future expense of the lease payment. So that gets put on the balance sheet. All right, let's see. Goodwill and intangible assets, a little bit of an increase. And deferred income taxes are up a decent amount. Let's see if they packed on any long-term debt. Okay, we see leases are up a little bit. Shocker. Other non-current liabilities. Not they added maybe like 10 million of non-current liabilities. That's long-term debt. Let's look at the statement of cash flows. What in oblivion is this? What? This is the weirdest cash flow statement I ever saw. Adjustments to reconcile net income to net cash. Why are they not giving us details on their statement of cash flows? Anyway, so their net cash provided by operations for the first 2 quarters of 2025 was 209 million versus 570 million the prior year. And I don't know why there's such a difference because I can't see the details. They spent 319 million in investing activities. Don't see the details versus 266 million the prior year. And they spent 744 million on financing activities, which could include share buybacks. Okay. Which is also a drop from the prior year. So they spent more money on investing activities and they cut down on the financing activities, probably because their cash flow from operations has dropped by more than half year over year. But I can't tell you why because I don't have the details. All right, let's see. Revenue by revenue. U.S. revenue is actually flat. There's actually there's flat revenue in the United States with a 1% growth in revenue in Canada. All the growth is coming from mainland China, 25% growth in revenue, and 19% for the rest of the world. So they basically peaked in the United States. They're going to have to find some way to turn that around. Sydney Sweeney. So North America is absolutely cooking their revenue growth. Comparable store sales down 4% in America. This is the U.S. and Canada. I like how they don't break that down. What is this? So they have net revenue for the U.S., Canada, and Mexico. But then comparable sales, they just show America's. So why don't they have the disaggregated U.S., Canada, and Mexico here? Are they hiding something? China mainland comparable stores revenue up 17% of the rest of the world, 12%. So all the growth looks like it's in China and the rest of the world. That's weird. Why don't they show US versus Canada? All right, let's see. Number of stores open at the beginning of the quarter. Number of stores open. Okay, so they opened 15 stores this quarter. So that's why we saw, obviously, the increase in capital assets. And they closed 1 store. Opened 15, closed 1. So they're still growing stores, okay? Total gross square feet. Why are we tracking square feet? So that's the earnings of Lululemon. I don't know. What do you guys think? Are you concerned about this? They're sucking in North America. And the tariffs are cooking them, baby. They need to go buy a World Liberty coin or whatever it is to blow some smoke up Trump's rectum. All right, let's do some member-only comments. Yes, I only do member-only comments. If you don't like that, call a freaking lawyer. Ryu, Pay Pigs, Peg. What's up, Wesley? How you doing, bro? Why so blue tube? Decimate. They got cooked, man. 5-year performance, negative 46%. That's pretty brutal. Only the resellers buying Lululemon, buying it at yard prices, are making money off this, and not that much. Fad stock. Is it a fad? I don't know. I don't wear Lululemon. Don't they have a male brand though? You can tell Strongman doesn't like sports. This literally the same time. Oh yeah, I don't care about sports. I don't watch any sports. I'm a loser. I'm a weirdo. Do you consider Jeremy as an animalistic? Oh yeah, he's a total emotional, animalistic clown. That dude is not a strategic thinker. He's a good grifter. He's very devious and cunning like a snake, but I don't think he really is a long-term investor. This might be bad news for my Nike stock. Yeah. Put it in BT, bro. Not financial advice. Ethan, you're a brokey. You can't afford a $5 membership. Yeah, why can't you give me $5, brokey? What's wrong with you? Give me money. Lululemon is absolute garbage. One of my ex-queens used to wear Lululemon. Oh, it's expensive, and I'm a girl. Like, God, women in their spending. Just no comment. We hold cash. He holds cash. I don't pay strong dong for advice. This ain't cash flow kings or capital mindset, degeneracy options, and seeking alpha copy and paste echo chamber. I pay $5 for entertainment in a comment. Be quiet, brokey. Thank you, Gil. What a weird name for a company. Looking for the name, I found this. What did you find? Well, yeah, what does Lululemon even mean? It's like a baby. It's like a regard. He said, oh, there's a huge crash coming because the market dropped 2%. He went all cash. Total. Who went all cash? I'm not all cash. I was at the store on Saturday and it was full. You can't tell me it's not a... Okay, Jeremy. Okay, little foo-foo. Go fluff manlet Paul. I'm actually buying this dip. That's a classic cut. I got shares at 260 on Strongman's tip, then more at 200. Now I pick up more to lower my average. Just buy the dip, bro. Buy the dip. All you got to do is buy the dip and it goes up. I mean, if you're going to make money, it's going to be in times like this when things look bad. But you have to question, is Lululemon going to recover? Are they going to fix their sales issues in America? They're doing really well internationally. Very well internationally. In America, they got some serious freaking problems. Can they fix it? If they can fix it, I think the stock will recover. And if they navigate the tariffs, which I think they will, I think they'll be fine. You really got to watch. You really got to dial into what their plan is to fix the United States and whether it actually convinces you. Strongman is putting us on. That's right. It's the stock game. Wasn't Lufufu all up in this stock? I don't know. Probably was. His cost basis is probably the absolute bottom. What's the stock price right now? 173.67. That's Lufufu's cost basis. I'd rather fluff someone that actually achieved something impressive and is like, what did he do that was impressive? He's a rich kid. He has daddy's money. What are you talking about? Are you talking about Paul? Get at it. Yes, I inherited money. Yes, I'm so successful. Are you jealous, loser? Lululemon has no inherent meaning, Chip Wilson, to include multiple L sounds. He believed that would sound exotic and be more difficult for Japanese speakers to pronounce. Wow. I burned my home. Why are you making pizza? That's not good for you, bro. I make my own home sourdough, protein, veggie, Greek yogurt. That seems like a lot of effort, dude. Just being honest. Jeremy taught me the way to do real business analysis. Buy it. 1,000x stocks. I got $250 in those unredeemed gift cards. Why do you have Lululemon gift cards? Are you a man? Why do you have Lululemon gift cards? Got put through the wash and Why is Strongman reviewing a dead company? NVIDIA is boring. I don't want to talk about NVIDIA. It's the largest market capitalization in the world, I think. Oh, NVIDIA. Well, what's that? I've never heard of NVIDIA before. Yeah, listen to this comment. Strongman is pretty successful, still young, has a house, career, didn't completely hose on his 2 marriages, come out relatively unscathed except for the minivan, and that's almost paid off. $6,400 left, and it's done. I'm just waiting on my NASA pension, and then I'm paying that van off. Oh, baby, I can't wait to pay that van off. I hate that van. I could pay it off now, but, financially, it's like I can get 4% in treasuries or save money on interest. I'd rather get the treasuries. I have respect for you until I found out you're an EM Paul. Oh, he is a fanboy. He was fluffing Paul like I've never seen a man be fluffed before. Strongman is a lot more successful than most average Americans, upper tier. If I made a better investment choice in VT, he'd be in the one. If I just bought QQQ, I'd be a multimillionaire. And if I avoided women. Take notes, boys. He invests in VT, bro. Some of the brokies. Oh, I think it's hilarious. Most of these people are freaking brokies. Oh, you bought VT. Oh, and they have like 10,000 in Robinhood and Tesla and Bitcoin. Funny how you fluff Paul while he's been claiming a stock crash is coming for many years. I've been massively wrong. I barely do it now, and you attack me, dumb clown, and I will be right. Probably when they officially letting normies invest their retirement plans on crypto. I did not like that. I don't like that at all. You're promoting penny stocks, bro. ZVRA isn't a penny stock. The founder wanted name difficult for Japanese to pronounce. And now his biggest market's in China. Or well, I wouldn't say the fastest growing. Why invest in fashion when you can invest in strong cash flowing business like Palantir and just pay a multiple of sales of over 110? Why not, bro? But what could possibly go wrong with that? The founder wanted it easy to pronounce for Japanese folks. Amara Lawrence can't fit into Lululemon. Maybe that's part. Maybe we're just getting so fat that it's killing off Lululemon. Costco has tattooed chef products again. Yep, I saw that. I think Walmart. I saw them at Target. Strawman, could you go through AMD last earnings? Yeah, pay me $50. No, 40. Well, for you, it's $50 because you didn't pay for your membership. You send me $50. I'll do a sponsored video on AMD. I asked Paul one question. Oh, yeah, be quiet. The second I instantly recognized you, boy. I'm like, that guy watches my channel. Just the fact that you posted one unironic comment is very concerning. Rancid products at this point.
You guys are jealous, and you're just jealous of it. You're just a hater.
The last of the rancid tattooed chef palettes. All right, guys. Well, that was Lululemon, Ernie. What do you guys think? Are you buying the dip? Is it going to vertical line next week? I don't know. You let me know. Anyway, like, subscribe. Consider joining as a member to support the channel and for me to respond to your comments. If you're not a member, I don't respond to your comments. In addition to that, you can book a free 30-minute tax consultation with me. I am a certified public accountant. I am a self-employed tax preparer. I can do your business and or personal taxes any state in the United States. Book a free consultation. Talk to me for free. I'll give you an upfront quote, and I'll prepare your business and or personal taxes like a boss. What's this last comment? Just because you dislike the stock doesn't mean their product is bad. Thanks, strong man. Thank you, guys, and have a wonderful, delicious night. Cheers.